Hello everyone, my name is Robert Więcko, and I will have a pleasure to be an operator during today's Q4 quarterly call. Please let me share some information before we start. This call is being recorded and will be shared on our YouTube channel right after the call. All of the microphones are muted. And please also be advised that questions were collected from the forum and Discord and organized in a way that we are answering them at the end of the call. During the call, questions can be asked on the chat window as well. They will be collected and we will answer as many as possible after the, let's say, official Q&A session. The moderator during today's call is Ryan Taylor, and I will operate. Ryan, I hand it over to you.
All right, perfect. Hi, everyone, and welcome to the fourth quarter and full year 2018 Dash Core Group conference call. I'm Ryan Taylor, CEO of Dash Core Group, Inc., and I'm joined on the call by several members of the Dash Core Group. Robert Wyko, our Chief Operations Officer, Glenn Austin, Chief Financial Officer, and Bob Carroll, our Chief Technology Officer, as well as a number of members of the leadership team and staff for when we get to the Q&A section. We'll first share a set of prepared remarks and accompanying slides, followed by a question and answer session. There were a number of questions that were submitted as part of our monthly Q&A process, and we'll address a number of those on today's call. And we'll also try to answer as many questions as we can from the chat, time permitting, as we have in the past. Keep in mind that the call is intended as an update on the core team's overall strategy and operations, so questions should ideally reflect that. More technical questions or questions we don't have time to address will be answered in a follow-up forum post. Our goal for the call is to provide a window for the community into our operations and development and review performance data on the Dash network from the fourth quarter and full year. We'll also share our latest observations on the market and our place within it. As with previous calls, we'll provide an overview of the Dash network and Dash Core Group strategy. We'll also discuss market conditions and the Dash network's performance. Glenn will walk us through an update on Dash Core Group financials, including our balance sheet and income statement. As you'll see, we continue to reduce our expenditures to account for market conditions and the proposal system's available funding. Then Bob will walk us through an update to our roadmap. In light of recent 51% attacks on other networks, it is important for us to prioritize network security and immutability as our primary objective. So as announced last month, we've modified our roadmap to include another Dash innovation called Chain Locks, which will make Dash the first proof-of-work coin immune to 51% attacks. Bob will further discuss the acceleration and development times we're experiencing from our process improvement efforts, the improvements we've made to new version deployment, and our progress with evolution. I'll then give an update on our progress against growth plans, updates on our legal activities, including a significant update on Dash Ventures, which I'm excited to share, and we'll conclude with an outlook going forward. The crypto market as a whole remained challenging during the quarter, capping what by many measures was the most challenging calendar year in crypto market history. The fourth quarter marked the fourth consecutive quarter of bearish market conditions, and the market fell from a total market capitalization of about 223 billion to about 126 billion during the quarter. This represents a decline of over 44%. For the entire year, the market fell 79% in 2018 from approximately 610 billion at the end of 2017. The altcoin market performed roughly in line with the broader market in the fourth quarter, falling around 45%, but remained well behind Bitcoin for the entire year period. From its peak in January 2018, the altcoin market contracted about 89%, even as new coins entered the market throughout the year. This resulted in Bitcoin's share growing to 52% of the market during 2018, which is up from about 39% at the end of 2017. However, in a sign of stability for the altcoin market, the share gains of Bitcoin seemed to slow in the fourth quarter as its market share edged up only about 1%. As I'm sure everyone listening is acutely aware, Dash was significantly impacted as well. Dash finished 2017 at a price of just under $1,000 and exited 2018 at about 81. Our market cap fell about 91% over the course of the year and about 56% during Q4. This price decline has a direct impact on the DAO's proposal funding system, which limits the scope of activity funded by the network. Despite the continued valuation challenges, the network continued making progress towards key goals. Year-on-year growth remained positive across a range of key metrics, and in particular, we continued posting transaction count increases, both year-on-year and quarter-on-quarter, even stripping out the estimated effects of the network stress tests that took place in the third and fourth quarters. In my view, this is remarkable considering overall market conditions. Other projects that are also targeting use as a currency have witnessed significant reductions in transaction activity over the same period. Median daily transaction counts for Bitcoin, Bitcoin Cash, Litecoin, and Monero all dropped year over year in Q4, while Dash grew by approximately 7%, excluding the effects of the network stress tests that were conducted during the quarter. Dash's merchant acceptance continued to experience strong growth as well, particularly in Latin America, where we also made strides with consumer access to Dash through our partnership with Crypto Mobile and the integration of Uphold directly into our Android wallets. We now have over 2,600 Dash accepting merchants in Venezuela and over 300 in Colombia. We're also integrated into a new ride-hailing service in Colombia called AB Ride, which has already seen over 3,000 rides paid for in Dash during their beta testing period in Bogota, with about 300 drivers able to earn Dash during the testing period. Our merchant count overall has expanded to over 4,800 total, which is up from about 600 listings a year ago. The network also proved that it's already prepared to handle significant growth. The stress test conducted in mid-November was another highlight for the quarter. The Dash network easily managed over 3 million transactions within 24 hours. The stability of the network during the test provided real-world validation that we have the option to safely expand transaction capacity as needed in the future, in line with previous research conducted at Arizona State University during the year. This research demonstrated that we could expand the block size at least 5 times larger should it become necessary. And that would imply network capacity exceeding 15 million transactions per day, without any further changes to our network architecture or masternode specifications. The truth is that we don't yet know the limits of the network, as all tested capacities up to 10 megabytes yielded stable results. Further research will be needed to discover the current upper limit. Dash continues to differentiate itself in other ways as well, particularly with regards to governance. We have proactively addressed governance issues with a variety of tools before problems occur. These include pioneering legal structures, protocol-level governance, and representative network elections. These tools combine to form an effective, yet fundamentally decentralized governance system. Later in the presentation, I'll outline in detail the progress that we've made with Dash Ventures, including details on the proposed structure and operations. This entity is another never been done before achievement of the Dash network, and I look forward to finally sharing the design details with you. So let's start off with the next slide. Let's start with an overview of Dash. our goal is nothing short of providing a greater degree of financial freedom for everyone by providing the world with better money. We're targeting individuals, businesses, and developers by addressing problems we see in the market. And we attract those users with a fast, cheap, secure, and easy to use payment network. We feature instant payments for under 1 US cent with enhanced user security and privacy. These features make Dash ideal for both online and point of sale purchases. Our network consists of many components, including the Dash currency, which is used to facilitate payments. We're working our way towards greater flexibility for developers to enhance the network with their own ability to build applications designed for use on the Dash network. We believe these are the components necessary to compete within the payments industry and deliver value to our users. Next slide. Dash is building each of these components that are necessary to deliver on the vision. We are, of course, a digital currency running on a robust network to facilitate transactions. The Dash network has higher capacity than most other cryptocurrency networks due to our paid node infrastructure and products that help developers and everyday users to access the network and transact. Each of these elements are elements upon which we can compete within the payments market. It's important for us to treat each of these as products that can be enhanced for the benefit of various stakeholders. And I encourage you to kind of go through these slides in detail because there's a lot of meat here if you aren't already familiar with Dash's approach and strategy. Next slide. All right. Dash Core Group's growth strategy consists not only on having a great product, but also identifying credible paths to growth in a variety of markets which are the best fit for cryptocurrency and Dash in particular. Delivering on the technology and product enhancements requires a complete re-architecture of the Bitcoin code base that Dash was initially based on. Our recently released version 0.13 is the first version with significant deviations from Bitcoin's base protocol. It introduces the first special transactions and foundational elements like deterministic masternode lists that will enable the network to integrate additional layers on our network and add to its capabilities. Things like payment metadata and direct application integrations. Armed with these new capabilities, the network will be able to deliver a user experience for developers, merchants, and end users unmatched by any other cryptocurrency network. Evolution will be the first release that takes full advantage of these capabilities and will enable developers to write or adapt applications for the Dash network, define a data structure, and store application data in the Dash network. They'll also enable developers to interact with the network through standard APIs. We also consider masternode operators and miners in our product decisions as unique entities with their own set of needs. As evidence, our 0.13 release includes many enhancements for masternodes to better control their voting rights or direct their masternode rewards to an address of their choosing, including now sending their rewards to a multi-signature address for added security and multi-party control. The markets we are targeting are those with the greatest need and greatest fit for cryptocurrency, and Dash specifically due to our unique features such as instantly confirmed transactions. These markets tend to be underserved by existing options. The first is hyperinflation. And in particular, Venezuela is proving to be a great market for Dash, not only because of the hyperinflation itself, but because we solve practical limitations of the local payment systems. Second area is cash-based businesses. Here we're focused on the cannabis market in the US, including suppliers such as test laboratories and complementary products. Crypto trading is next. That's improving the movement of value between exchanges and delivering greater security to traders that can now store value off exchange and return that value to a trading position quickly using our instant send technology. Next is remittances. We're focusing initially on the US to Mexico corridor, but taking a look at Latin America more broadly as well. And lastly is high chargeback industries. Our initial focus there is on online gaming and fantasy sports. We believe that we can multiply our market growth by targeting developers, our substantial community, and our merchant user base with tools that allow them to help expand the ecosystem within these markets. Developers will play a central role in building application for Dash once our Evolution release is deployed, which will rapidly add utility to our network. Moving on to key metrics for the quarter. Volatility in the fourth quarter increased around 12% compared to Q3 and remained slightly elevated compared to historical averages. Mean transaction fees dropped significantly, mostly due to the lower price of Dash, but year-on-year comparisons include a 10x transaction fee reduction that was included in a release early last year. Media exposure dropped in Q4, which is typically a slower quarter. Despite reduced exposure, new mobile wallet downloads expanded in the quarter, as we seem to have reversed the downward trend in new user downloads. Total addresses with over $1 USD is a measure that we've tracked in the past. It's not directly comparable to prior periods in this case because of the high number of private send inputs that dropped under $1 in value when the price dropped below $100 per Dash. However, despite that effect, the data is indicative that our user base each of the last 4 quarters expanded, including during Q4. Q4 also saw transactions and exchange trading volume expand modestly compared to Q4 of 2017. Even if you strip out the stress tests from October and November, economic transactions expanded roughly 7% year on year. And notably, mixing transactions are also up considerably during the quarter. Note that the percent of instant send and private send transactions were artificially low this quarter due to the stress tests. None of the stress test transactions included any instant send or private send transactions. So they actually, remained relatively stable compared to early periods when you adjust for that effect. Mining pools have significantly concentrated since Q4 with just 2 miners needed currently to constitute 51% of the network hash rate. And this is one of the reasons we incorporated chain locks into our immediate roadmap to ensure this risk is quickly mitigated. And lastly, the Dash supply expansion is notably now under 10% annually. And as discussed, price and market cap dropped about 55% during the quarter. At this point, I'll now turn it over to Glenn, who will walk us through our financial position and provide some additional updates.
Great. Thank you, Ryan. Hi, I'm Glenn Austin, the CFO of Dash Core Group. I will provide you with an update on our full year 2018 financial results. First, some disclosures. All of our accounting is conducted in USD to provide a stable picture of our financials. Since we are using mark-to-market accounting for our holdings of Dash, we are not reporting in accordance with US GAAP. We're comparing 2018 versus 2017 full year, which is a bit of an apples to oranges comparison, given that officially Dash Core Group as an entity commenced operations in July 2017. This means that the income statement for 2017 and certain accounts on the balance sheet only reflect results for roughly half of calendar year 2017. Finally, as communicated on the last quarterly call, we have moved to accrual accounting. This shift provides a more accurate picture of our assets, net of liabilities. Because of all of these changes, there were a number of revisions to our previously published 2017 results. Okay, so this is what we're going to cover today. First, we're going to go through the balance sheet, comparing end of year 2018 versus end of year 2017. Following that, we will review the income statement, where we will go through the largest components of our spend. And finally, we'll go over a lesson learned slide to discuss some of the conclusions we have gleaned from 2018. So let's start by reviewing the balance sheet. As you can see, our assets decreased to 1.1 million, or 89% year over year, driven primarily by a corresponding decrease in the price of Dash. The majority of the decrease in our balance sheet occurred in Q1 of 2018, as we held significant amounts of Dash on our balance sheet. We did explore cashing out our Dash for fiat around the peak, but there were a number of obstacles we couldn't overcome. First, Dash Core Group accounts were prohibited from trading due to the withdrawal of our primary exchange from the US market. Second, we were attempting to open US bank accounts when the majority of banks were hesitant to touch the cryptocurrency industry. Without a legitimate bank account, we wouldn't have had a proper place to deposit the fiat. It took us until the second quarter of 2018 to open both an exchange account and a bank account. And after assessing our complete financial picture, we determined that almost all of our assets should be in USD to match our existing and upcoming liabilities. We cashed out a majority of our remaining holdings of Dash at the price of approximately $240 per Dash. We also instituted a policy where we convert the majority of Dash into fiat upon payout from the Dash proposal system. Unfortunately, throughout 2018, the decline in the price of cryptocurrencies, including Dash, was unrelenting. For multiple consecutive months during the year, we faced a cash out price well below the initial price at which we submitted a proposal for funding. This led DCG to tap into our buffers and force us to eventually draw up to our self-imposed maximum of 60% of the available Dash from the proposal system. We drew this maximum in every budget cycle in the fourth quarter of 2018. 75% of our balance sheet currently consists of 3 accounts: business development, core team salaries, and legal. If prices remain in the current range, we anticipate continuing to draw 60% of the Dash proposal system funds to keep operating without major disruptions. Our liabilities are mostly related to work our contractors performed in December 2018 that had not been paid out as of end of day December 31st, as well as around $32,000 we hold in our escrow balances. Over the course of the year, we had a net loss of approximately $8.4 million, primarily driven by that $6.8 million loss in the value of Dash on our balance sheet. Next, we're going to go through the income statement. Next slide. Dash Core Group recognized revenue of around $7.3 million from the Dash network in 2018. Expenses exceeded revenue by approximately $1.5 million during the year. The bulk of the $8.8 million in expenses took place during the first half of the year. With the drastic price reduction in Dash, we had to reduce our fixed cost structure during the second half of the year. This scale down was achieved through reductions to both compensation and non-compensation run rates. On the compensation side, we had a number of volunteers come forward to take significant pay reductions, and we also didn't renew a number of staff contracts. On the non-compensation end, we reviewed all of our budgets and communicated the measures we took in several detailed Dash forum posts. All right, so let's dive into some detail around our compensation expense. This expense was our largest, and in 2018 was $4.5 million. This line item reflects the entire team of developers, technical staff, and business and support functions. Our compensation run rate exiting Q4 was approximately $300,000. This represented a large drop from the $485,000 peak monthly compensation run rate we had in the third quarter 2018. In the past few months, we have been forced to make some very tough decisions around how we slowly reduce our compensation rate. The process started with staff raising their hands and volunteering to work for significantly reduced pay or no pay at all. As the price kept declining, we had to thoughtfully consider which functions are most essential to achieving our objectives and where to continue allocating our resources. This exercise was performed with an eye on providing continuity of service for the tasks Dash Core Group has committed to undertaking on behalf of Dash Network. Now let's look at the non-compensation expenses. These expenses have been drastically reduced over the past year. During the first 3 quarters of 2018, we averaged approximately $1.5 million a quarter in non-compensation expenses. Contrast that with the last quarter of 2018, that number decreased to approximately $500,000. Given the adjustments we've made to our budgets with the continued slide in the price of Dash, our current non-compensation run rate as of today is approximately $130,000 a quarter. Our largest non-compensation expense of $2.4 million was for promotional expenses. These are expenses related to DCG's efforts around business development, marketing, and public relations. The bulk of the expense was for integrations with business partners, strategic partnerships, expenses related to conference attendance, and public relations. As with most of our expense base, we reduced these costs significantly by seizing all conference sponsorships, getting a significant reduction in our public relations invoice, and reducing the costs of our business development agreements. The last category where we spent over $1 million in 2018 is for professional services. These are legal expenses, tax accounting expenses, translators, and any other third-party professional fees Dash Core Group incurred. Next, let's review our other gains and losses. Given the large amount of Dash on our balance sheet as of the end of December 2017 and the significant price decreases, it is hardly a surprise that as we liquidated Dash, we experienced losses. Those losses came in at $6 million for the year. Net income for 2018 was negative $8.4 million. Next slide, please. 2018 was a very difficult year for the cryptocurrency industry at large and for Dash and Dash Core Group as well. During that period, the price of Dash dropped 92%. There are a number of lessons learned. Lesson 1 is around how we plan. We have shifted our planning process to be more iterative. Our planning processes enable us to quickly pull in or exclude expenses on a prioritized basis, depending on the price of Dash. This has allowed us to react to price movements flexibly. Lesson 2. I've already discussed our inability to move to fiat during the peak of the cryptocurrency market. If we have the luxury of another significant bull run, we would like to recommend to the network that it would be prudent to build up a significant fiat war chest. The lesson learned for us is that we need to place a higher value on redundancy to deal with banking, exchange, legal, and regulatory risk. Though banks appear to be relatively comfortable working with cryptocurrencies today, we need to have contingency plans in place if this attitude were to suddenly change. We also need to have redundancy plans in place in case there are issues with the exchanges and or broker-dealers we currently have relationships with. So, in conclusion, given current Dash price levels, our budget, like many projects in the industry and around the Dash ecosystem, is under pressure. We are laser focused on delivery, and we are thoughtful around the very tough decisions we have to make around cost reductions to ensure the least disruption to the overall project. That concludes the finance update. Next, Bob is going to take us through the technology section.
Great. Thank you, Glenn. This is Bob Carroll, Chief Technology Officer at Dash Core Group. So despite the external challenges that we faced, I consider our fourth quarter of 2018 a very successful quarter for the engineering team at Dash. We placed a greater focus on process improvement, which will benefit the entire community will give us greater product quality, more insightful product knowledge throughout the community, as well as clearer communication. One of the key events of the fourth quarter was a 3-day online developer conference. We had members of our team who delivered in-depth technical presentations internally on their respective components of the technology stack to really raise the baseline knowledge level overall of Dash evolution throughout the entire organization, not just within engineering. The effort that we went through really established a model that we can now follow and will follow as we provide public access to similar content as we move closer towards our 1.0 launch. So today during the call, against the backdrop of the product roadmap, let me highlight a few of our process improvement initiatives in the fourth quarter. The first one that had substantial focus was our release process. This was a multifunctional effort, not just with engineering, but across all organizations such as marketing, our product organization, the integration team, as well as folks on engineering and support. This was really put in place as far as a process improvement initiative to prepare for the 1.0 release of Dash Core, which we know is still ahead of us. We decided to put this into practice, though, with our version 13 release to begin to deliver improvements to the community right away. Some of those results of this new process led to a document we called the product brief, which was delivered when we released to testnet. And that was to highlight the key features of the product, to set expectations for those who would be interacting with it in the community, and to begin that learning process of what was in it. We also had a great emphasis on enhanced communication to all members of our stakeholder community, not just our developers, but also specifically to masternode owners as well as miners. And we'll continue to work on this process with our 14.0 release as well as our 1.0 release. But we believe that it's led to very positive results with a cleaner rollout, a stronger communication, greater sense of expectations, as well as great code quality on top of that. A second initiative that we undertook on process improvement was around development standards. And it was really with the goal of repository cleanup and to prepare for making the evolution repositories made public. So this effort was led by Nathan Marley, a very seasoned and tenured team member here at Dash Core Group, and began with information sessions to our development teams in coordination with our QA organization. We conducted a thorough inventory of all the repositories that belong to each of the individual teams, realizing that these teams have been doing work independently on their components, and we're now in that phase where we're bringing things together. We looked at dependencies of other repositories, redundancy of code within different repositories, and then standardization that we could apply for coding standards, documentation standards across all of those, which just led to some general cleanup. Our goal is to make all Evo repositories public. We have our first two that have been made public this quarter, our JSDPP, which is our JavaScript Dash Platform Protocol repository, as well as our DPP spec. They're introductory repositories. In the future, you'll be seeing publicly available our Drive repository, our DAPI or Decentralized API repository, as well as our DAPI client and others. So that was a major effort in Q4, which will result in benefits in this coming quarter. The last process that we placed a lot of emphasis on was our road mapping process. So I'll share with you some thoughts on this, and as I do, realize that we've learned some lessons internally at Dash about roadmaps. Sometimes those have been hard lessons. They've caused us to be a little shy, and right now maybe under promising a bit. but know that our focus is truly on delivery. So the current roadmap that you're seeing here will not contain any surprises. You see 3 major releases of core. Again, 13 and 14 having all of the prerequisite components for a full evolution release. Version 13 was released 3.5 weeks ago, one of the most significant releases we've seen at Dash. Multiple dips were included in it, and really sets the foundation for Evo and some of the key features that we need. Ryan highlighted a lot of the distinctive features as well as the differentiation in there, so I won't belabor that. The adoption in our mind has been very successful, not only measured by adoption rates for masternode owners as well as mining, but also just the code quality and the fact that we haven't seen any maintenance releases there. As with many major releases, we typically might see some minor releases that come out afterwards for various purposes. As I said, we haven't had a need to implement any for code quality types of issues, but we do have plans to have a release imminently, a 0.13.1, to really expedite adoption. We're sitting at about 75% adoption on our masternodes at this point in time. And we want to expedite. We want to continue to move on now that we know that that this is a quality release. And so you will be hearing, we'll have a formal announcement of a 13.1 release to help us lock in that DIP 3 so we can begin registering masternodes deterministically. Our next major release is 14. We've long talked about long-living masternode quorums and the benefit that those will provide as far as consensus, especially as we have off-chain data storage in evolution. However, with the recent notoriety of 51% attacks, we looked at the long-living masternode quorums as really our first use case to implement that and improve our security posture. So chain locks will take advantage of those long-living masternode quorums. It will have the ability to lock a block or tie a particular block on the blockchain to a particular block height, preventing secret mining and things that would lead to a chain reorg, and which could constitute a 51% attack. We've slowed down our release schedule slightly to incorporate that significant feature. It's not throwing us off track much at all, but it was something that we felt like we needed to be responsive to in the community, and especially to protect all of the interests in the Dash network. So that version 14, I'm happy to announce will hit testnet this quarter. And again, we look forward to feedback on that as it goes on testnet, and we'll drive that as quickly as possible, as prudently as possible to mainnet delivery. If needed, we might look at a 0.1 release after that, especially if we find that there's some final preparations or any other prerequisites for the Evo MVP, which is 1.0. We know that 1.0 will introduce blockchain users. We have a lot of work to do still on that, and you can expect during this coming quarter for us to communicate more specifics about the blockchain user names and username registration process. But realize that what 1.0 delivers is not just core functionality, but really the delivery of the layer 2 components for decentralized access to this decentralized storage mechanism, really what we're considering all things on layer 2, and the ability with our development platform to build decentralized apps. We will have the necessary SDK and necessary libraries that will be associated with that, and we'll discuss later about the timing of those. So as far as our libraries go, moving down the roadmap, you can see that we have 4 or 5 languages noted under our development libraries. The research that we did in the V13 to prepare for the V13 rollout as part of our impact analysis really discovered that these were the 5 key libraries that we needed to support to represent more than 90% of our community's needs as far as our developer communities. And so that is our commitment moving forward. We're finding ways to increase that, which is really the addition of the .NET as well as PHP support there. And then moving further down to really our wallet delivery, some of the things that are on our roadmap, both on Android and iOS support, which are all now staying in sync and supporting v13 as well. And then the preparatory work that needs to be done for 1.0, which includes Dash Pay, which would be our new wallet, an MVP wallet, which will be the first to utilize blockchain usernames. So lastly, what I just want to mention before we move on is that our Agile implementation also continues to expand across the teams within Dash Core Group. With regular sprint planning, backlog grooming, demos, and retrospectives, we learn each time we finish a sprint a bit more about how we can work more effectively as an organization and deliver higher quality products. So in summary, I can't be more excited for what Q1 has in store for us. The v13 migration has been actually really exciting to watch. We've appreciated the positive comments we've had from members of the community on how that's rolled out. And we will continue to take those lessons learned and implement them for a better experience for all. We're thrilled to see v14 hit testnet, to see the use of long-living masternode quorums take place, as well as the benefits of chain locks there. And what Q1 will also have in store for us is all of our Evo or Evolution repositories made public. And we look forward to the community's response to that and their support as we strive to make them better and to find additional use cases for building applications on Dash. So with that, I will turn it back over and thank you.
All right. Thank you, Bob. Next up, we are going to cover our growth strategy. If you could flip to the next slide. So Dash Core Group posted a really standout quarter in Q4, expanding our network of services against our growth strategy. Starting with Venezuela, we continued to deepen our partnership with Crypto Mobile to get Dash into the hands of as many Venezuelans as possible with our Crypt 2.0 release. This release included a Discover Dash web app that DCG's BizDev capabilities team built, a partnership with Dash Text for their Crypto Mobile K1 feature phone, and a promotion for it. We also released data as part of a blog post regarding the first phase of our partnership with Crypt, and announced that 53,000 units had already been sold in Venezuela alone. Growth figures for Bitrefill and Uphold were also released. They are both applications that are included in the Crypto Mobile package, and they experienced double or triple digit growth from the Venezuela market immediately following the initial release. So it's clear that that is having an impact in the market, and we communicated kind of a longer term vision for a continued partnership. And that partnership has continued to evolve, with Crypto Mobile now posting their own proposal that passed in the most recent budget cycle. So we're very proud of the further development that we've had there. With Uphold, we added direct integration into the Android wallet, which we announced at Money 2020 back in October. And for iOS wallet users, you'll be pleased to hear that the integration is nearing ready for that platform as well. So you should expect that rolling out this quarter as well. Of course, Church's Chicken was another highlight from the quarter because it represents the first corporate nationwide chain integration driven from a corporate office. And in December, Dash became available at 10 Church's Chicken locations across the country. CoinCola was also announced in October. They offer OTC trading services to the Venezuelan market. So we added capabilities there as well. Alt36 remains in their beta exclusively with B2B businesses, but they're preparing to roll out new customer-facing functionality. CanTrade, which is a B2B marketplace, is fully integrated. All merchants on the CanTrade platform can access Alt36 sign-up and can pay electronically for purchases from suppliers using Dash. These tend to be higher volume purchases compared to retail transactions, as you could imagine. Alt36 also added a cash management service in Q4. The service converts larger amounts of physical cash to Dash from licensed, verified, and approved legal cannabis businesses via scheduled pickup services. The first of these pickups began towards the end of Q4. This enables businesses to gain immediate access to their funds and transact digitally through other integrated businesses such as CanTrade. At this time, there are at least 30 partners that have completed, started, or are in queue to begin integrations into Alt36's platform. Alt36 is currently servicing customers in Arizona and California, where the beta version of their platform is operational and licensed. Alt36 is soon expanding their service area to include Oregon, Nevada, and Washington as those licenses are approved. They currently expect to onboard approximately 1,000 merchant locations over the next quarter. On the retail consumer side, they have pre-registered approximately 500 customers. Prior to the consumer product release, Alt36 will market to these customers and to those of channel partners as they are added to the platform. Alt36 is currently raising capital from accredited investors and institutions to support their expansion efforts. Dash Core Group participates in planning and strategy workshops with Alt36 and facilitates introductions to potential investors, channel partners, and service providers that can support their strategy or add to their capabilities. In the cryptocurrency trading area, we facilitated an integration into 4 exchanges. This includes HBUS, IDAX, DigiFinex, and Panda. IDAX and DigiFinex are both top 15 exchanges by volume, and both integrated instant send functionality. Panda is an exchange focused on Latin American markets, particularly Colombia and Panama, which will aid in our expansion in that region. In the high chargebacks campaign, we announced an integration into ePayments, which specializes in payment services for high chargeback industries. There are several conversations with ePayments clients since the integration took place. We also have several conversations ongoing with exchanges, retailers, ATM operators, and others to build infrastructure for the Latin American remittances corridor. We didn't have anything to announce within Q4, but we're making significant progress laying the foundation for that strategy as well. Going forward, with limited business development resources, we plan to prioritize cannabis, Venezuela, and crypto trading opportunities as we are getting traction most quickly in those categories and experiencing some synergies between the various integrations that we're obtaining. While we will focus there, we remain open to attractive opportunities in any of our target areas as we continue to expand. With a total of 34 integrations in 2018, we actually had our best business development quarter in Q4, despite the holiday period falling during the quarter. We also held a successful Money 2020, in which we made several announcements, met many prospective partners, and demonstrated the uniqueness of our network. John Kindle from the capabilities team did a great job throughout the quarter working on multiple integrations and supporting an interactive experience at Money 2020 that allowed conference goers the chance to experience the speed of the Dash network for themselves. Overall, this was a very successful quarter for the business development team, and I congratulate them on all of their achievements. With that, we can move to some additional updates and outlook as we look forward. The Dash Network and Dash Core Group continue to make significant progress against our strategy. We're currently resource constrained and have actively cut spending to accommodate a much lower budget. However, our strategy is bearing fruit, and it seems that as a result, our productivity is improving on the business side. And likewise, we're seeing an increased pace of development on the technology side. As Bob mentioned, we expect version 0.14 to be on testnet this quarter. On the legal front, we made significant progress towards creating Dash Ventures, a wholly separate entity through which the network can make investments in equity, assets, debt, or any other investment vehicle with the capability to distribute gains back to the network. We now know what the legal structure will be and how it will function. All major legal questions about the viability of this structure has now been resolved, clearing the path to creating the entity, which is underway as we speak. This entity will soon enable entirely new ways to invest in the growth of our ecosystem, while generating new diversified streams of income that will further strengthen the network and make it more resilient and stable. We encountered numerous challenges along the way, and at times we doubted whether it would be possible to achieve all of our intended goals. I want to specifically thank Glenn Austin and Fernando Gutierrez for their help. Throughout the process, they both played significant roles in helping me push things forward and challenge the law firms on what is possible. Dash Ventures will leverage a relatively novel legal structure in the Cayman Islands known as a foundation company limited by guarantee and after formation. Unlike most foundations, this type of foundation is both ownerless and memberless once it is formed. The foundation is overseen by a number of statutory roles called supervisors, who effectively stand in for the role that would normally be reserved for shareholders. Primarily, that's assigning the board of directors of the foundation. Supervisors and board members are obligated to fulfill the foundation's constitution, which is drafted as part of the creation of the foundation. This legal structure first became available as in November of 2017, and to the best of our knowledge has never been used to form an investment firm. This is truly a world first. In the case of Dash Ventures, we have created a legally enforceable mechanism to allow the Dash masternode operators to elect those supervisors that will represent their interests. As with the trust protectors that oversee the Dash DAO Irrevocable Trust, this election will also take place annually. Key organizational and operational decisions would be put to the supervisors for approval by the board of directors, which will be included in the Constitution. Day-to-day powers will remain with the board. This will enable the supervisors to consist of virtually anyone trusted by the network to carry out supervisory duties, while the board of directors would consist of experts with the appropriate skill set to oversee the investment firm. There are additional statutory roles that require local representation as the entity is formed. Glenn Kennedy and his firm Paradigm has agreed to provide the registered office and secretary for the foundation and fill one of the board of director roles. Casey McDonald from Calderwood, a fund governance firm, will fill another director role. To provide continuity in the initial operation, they will require a 2-year agreement funded by the Dash Network. We also need an initial slate of supervisors. Glenn Kennedy and Casey McDonald will fill 2 of these roles initially, and the remaining 4 supervisors will be elected by the network for the first year. Starting in the second year, all 6 supervisors will be elected by the network. To ensure a smooth handover I will gladly offer my services to the foundation for the first year as a non-voting participant to answer questions, provide any expertise, direction, guidance, and counsel to the supervisors to ensure all intents of the foundation's constitution are clear. Our intent is to enable Dash Ventures to operate completely independently from Dash Core Group. One of the thorniest issues we grappled with throughout these efforts was how to distribute investment gains back to the network. Any direct distributions would require all recipients to produce Know Your Customer anti-money laundering documentation, which would be costly, time-consuming, and generate immediate tax implications for recipients. As a permissionless network, it was critically important to us to avoid any Know Your Customer or anti-money laundering processes for Dash users to participate. Our solution was to avoid any distributions altogether. Instead, we will direct the foundation to buy Dash on the open market and destroy it to facilitate value transfer to all Dash holders equally. This will reduce the circulating supply and boost the price of Dash in a comparable manner to a stock buyback. It also results in capital gains that only becomes taxable for individual holders upon the sale or spending of their Dash, just as it is today. In the same way that price appreciation resulting from a stock buyback is not taxable until those gains are realized upon sale. This makes the entire solution more efficient operationally and from a tax perspective, while retaining the privacy of our users. Along the way, we encountered many vexing questions, only a handful of which I've shared with you today. As you can probably tell, an incredible amount of thought and debate from incredibly talented people went into this solution. Everything from choice of jurisdiction to legal structure to distributions of gains, finding service providers, identifying how to overcome legal quorum requirements in a DAO election for which we can't even identify the individuals. Altogether, it took the expertise of 5 firms to reach this point, and I'd like to thank our legal teams for their diligent work to solve every issue placed in front of them and our very stringent requirements. This entity will be another huge differentiator for the Dash network and should enable investment in proposals for which grant funding makes little sense to pursue because of the risks involved or the high costs. It should make our entire proposal system more efficient and effective, providing additional options for proposal owners. And I look forward to the proposal system adjusting to take advantage of this new option. Dash Ventures will be seeking funding for the first 2 years of operating expenses in the near future to enable it to launch and cover an initial operating period. These costs include 2 years of services for the registered office and secretary, government fees, director fees, bookkeeping services, and a service to deal with incidentals and/or liquidation costs if the network fails to fund Dash Ventures after the initial 2-year period. Supervisor roles are not anticipated to be paid positions. The total estimate for these items over a 2-year period will be about $144,000. Dash Core Group will cover the costs of the initial legal setup using funding from previously approved legal proposals designated for that purpose. There may be other costs associated with specific investments, such as costs for legal agreements, costs for custodial services, or investment management fees. But likely these types of expenses can be paid for as part of specific proposals, or investment management fees could be paid out from assets under management. Details on specific costs will need to be addressed by the foundation or in a specific funding proposal on a case-by-case basis. We also made further progress in our pursuit of no action relief from the SEC. At this time, we cannot comment on the specific status and interactions on the advice of our counsel. we do anticipate delays resulting from the 35-day-long government shutdown that started in December and ended last month. We will inform the community of any substantial developments which we're permitted to share. We're also in the midst of our first open election for the trust protectors overseeing the DAO Irrevocable Trust. The trust owns 100% of Dash Core Group. We posted an update on the process at blog.dash.org this past Sunday. DashWatch has agreed to provide oversight over the election and validate the candidates and results. Anyone interested in running for these positions may submit their names to team@dashwatch.org before the end of the day, UTC, on February 24th. A list of eligibility requirements is available in the blog post, as well as additional details on the entire process. The vote itself will take place throughout the month of March and will conclude on March 31st. We will provide a section on the Dash forum for candidates to post information about their candidacy and answer questions from community members. This is an exciting transition that puts control of Dash Core Group in the hands of the network and offers another avenue to affect change at DCG. Despite all the challenges of 2018, I'm proud of the progress DCG made on multiple fronts. We're one of the few projects that has continued growing transactions in this bear market. We're leading the way on innovation, effective governance, strategic growth plans, and now a world-first investment fund. Our releases are accelerating, and we found ways to do more with less resources. What really stands out to me is the personal sacrifices of so many members of DCG over these last months. Many are working without pay or at reduced pay to ensure the sustainability of DCG in the network. It's evidence of the incredible passion that we have in what it is that we're doing. With that, I'll conclude the prepared portion of our remarks for the day. Thank you for listening, and we hope you found it informative, whether you're new to the Dash community or have listened to our quarterly calls in the past. As with past quarterly calls, there is an appendix in the slides that you'll be able to access after the call. They include additional detail on metrics, accomplishments from the quarter, challenges we faced, and an overview of what we're working on next. Because this is our year-end report, we also included select annual metrics that go back to 2014. At this point, I'll turn it back over to Robert to remind everyone of the process we'll follow for the Q&A session, and I thank you for listening.
Thank you very much, Ryan, for this great summary. So with this, we are moving to the Q&A session. As a reminder, the session you are seeing on your screens have been gathered on the Discord and forum channels. Right now, our team members are going to answer those questions. We were gathering a couple of other questions on the chat window on our YouTube channel, and they will be answered consequently after those what you can see. So moving on to the first question. When will be the new roadmap that was presented to us on an earlier quarterly call by Bob Carroll as a new draft roadmap concept be implemented on GitHub and on our official Dash forum, so we can finally start referring people to it?
Thanks, Robert. The real question in there is, when can we start referring people to a roadmap that is up to date and current and easily accessible? We've really decided that the best location for a roadmap is going to be our website, which will be live this within the next month, and that's because it's a living document, that it's something that we're going to update on a regular basis, and we want people to be able to go to it. Due to the fact that it's not necessarily a community maintained document, that it's maintained by DCG, we don't feel that GitHub is actually the appropriate spot for it. So that roadmap will be retired. We'll leave it up there as far as historical content, and the new roadmap will be on the website. And it will take the form, as it was mentioned in the question, that Liz Roebuck, our Chief Product Officer, has been putting together and using, and that we've been collaborating on over the last couple of quarterly calls. So it'll look a bit more like we have today, with some interactivity to it, so we can drill down and find out details about features as well.
Thanks, Bob. Next question, I believe, is also to you, so please stay connected. In the 2018 Q3 summary call in November, Bob mentioned that there are a series of evolution white papers from 2016 and 17 that have not been released, and that he would like to release them because they have historical value. I have not heard anything about this since then. Is this going to happen?
Yeah, thanks. As I mentioned before, this white paper, it's about a 60-page document. It's a great artifact. It's really the original thinking that we have on the topic. And it was the basis of our patent application that occurred back in 2017. And we have some additional patent activity going on right now. And so that white paper is actually intertwined with the additional patent activity. We should be through that process sometime in March. And my goal is at that point in time to actually have a version 1 of the white paper. The white paper, obviously, since not many people have seen it, was marked version 0 draft. And so we, in going through this patent process, we will be developing a real version, version 1. And but my desire is to actually publish both of them. I think it's important to have historical perspectives, and that is why I liked that document. However, we owe it to the community to make sure that we're not that we're managing expectations correctly and putting out accurate content. And so we would not want it to be misleading to the community if there were design ideas in there and our implementation varied from them. So we wanted to be careful with that as well. But like I said, I like the fact that we have some history that we can present, and we intend to present both of those.
Thanks. Sounds exciting. Next question. Dashcore Group asked for masternode owners to support a 500,000 proposal for BitGo to integrate Dash. It all seems to have gone quiet since it got founded. Have there been any notable integrations or developments since BitGo added Dash? If yes, what are they?
Yeah, I'll take this one. So BitGo is a custodial service for those that aren't familiar. They continue to add new services to their platform, but primarily they are used for storing larger amounts of funds in a highly secure way, typically for corporate clients. BitGo is a prerequisite for many of the exchanges that are of high priority to the network. The BitGo integration now complete. I think it completed around the October timeframe, if I recall correctly. That has enabled us to begin to pursue those other opportunities. BitGo also services institutional clients, so for larger holders or investment firms that might hold Dash as part of a portfolio, such as index type of funds that we've seen prop up in the marketplace. For many of those funds, it is also a prerequisite. And so for various reasons, it was pretty important that we get on BitGo's platform. They're really the leader in their segment of the market, and they are a dependency for us to be able to pursue a lot of these other opportunities. We are in discussions with some of their customers. I can't disclose which ones, but that has opened the door for us. And our hope is that we'll have some integrations result from it now that we're able to have these discussions. So very important for a variety of different reasons, and it took some time to integrate, but here in the fourth quarter, they did complete the integration.
Thank you, Ryan. I'm sure everyone is looking forward to see all of those integrations made thanks by BitGo. Next question. Are there any features and functionality specifically planned for business in the DashPay app or Evolution account management? Have businesses been asked for input or testing yet? If not, when do you plan on having an Evolution alpha release to share with partners?
So we do have plans for merchant features and functionality in DashPay for what I would consider to be true business-to-consumer activity. Features like concepts like order history for a customer that would be represented in a one-to-many relationship for each customer having multiple orders in there. However, business-to-consumer features will not be in our MVP version. The MVP version, like wallets today, still accommodate merchants to work with customers, but they're doing it more on a consumer-to-consumer perspective as opposed to business-to-consumer. It'll just be a lot easier because we'll have usernames in there. So follow-on releases would have merchant capabilities, and we have been working with some businesses to understand what the requirements are there. And as far as alpha releases, as soon as we have dates on that, we'll publish that on a roadmap.
Thanks. Is DCG planning on releasing an SDK or something to that effect ahead of 1.0 so that developers have time to build out apps and integrations ahead of launch? I don't know how that might impact the timeline, but I think it would be an enormous benefit to jumpstart the DApp ecosystem.
Yeah, we agree with that that question and that point. We don't think that it would impact timelines to do that. It is just part of what we plan on doing. So the developer community is really critical, and we do want to give them advanced opportunities to work with our technology. So our first effort here is going to make all of our Evolution repositories public as soon as possible. That would be this quarter. And so we'll be sharing those repositories, obviously, to engage the community, which helps us to improve our code quality. But also having them public is going to facilitate development activity on the new platform. Then following that, we do have plans prior to MVP releases of 1.0 that we will deliver our first reference app to the community as well. And that will allow developers to see how all the components fit together and how they can be used. And so that can be used as somewhat of a tutorial to get used to the new technology. And then finally, we'll be organizing all of these components, these separate repositories, separate libraries, into an SDK that would be simply consumed by new developers to the Dash community. I think the reality is existing developers are kind of familiar with our quirks and things like that, and how things might be separated and how we called things, named things in the past. But to attract new developers, we want to make sure that we have kind of a tightly coupled SDK for them to be able to download and start to use. That SDK will probably not be available until the release of 1.0, but the components will be, and they'll be made public shortly.
Great. Thank you, Bob.
Yeah.
Next question. Has DashCore formally applied to be listed on Coinbase, either through direct communication or their web portal? Ryan, maybe you will take that one.
Sorry, I was on mute. Yeah, so Coinbase created a application process for coins and tokens to be listed on their platform. It is a very robust set of information that needs to be submitted. I can confirm that Dash Core Group has submitted an application on behalf of the Dash network in its entirety, and believe that we have addressed every question that is on that questionnaire. As a matter of policy, we don't discuss the status of discussions or the likelihood of integrations. That's just a policy that we follow across the board, because we found that affects our ability to be integrated if we're sharing information others are not comfortable with. So we can't comment further on it. What I would say to the community is, if you want to see Dash integrated into Coinbase, let them know. I think they will respond, or I imagine that they would respond to demand from their customer base to add specific currencies, and if we have information to share, we will absolutely share it.
Thanks, Ryan. Next question. Will DCG be helping with integration partner testing for POS solutions that support Dash, so merchants can make a smooth transition, allowing them to the ability to accept Dash Pay username payments in sync with Evolution public launch?
Well, we definitely want to help our integration partners, right? And then they'd be working directly with the merchants in an example like a point of sale solution. So we'll do the best we can with the resources we have. Right now, our integrations team is really set up to do that, but that's a pretty lean team. But we're here to help. And then I think what else we can do is make sure that we have as many self-service resources available through the developer forums and the new developer portal on the new website. And then, really a call to the community as well, both online community as well as on the streets, to make sure that adoption is understood and the abilities are out there. And then, of course, lastly, we can always leverage our product team and our marketing teams and tech support to put together good materials and make those available to the community. So we definitely want to help our integration partners. We'll be a bit lean and strapped, but part of this is going to be a bit of train the trainer, build some expertise in the community, and then let the community help manage itself and manage our way through adoption.
Thank you, Bob. Can Fernando reveal the results of the Dash Core Group $1.5 million USD funded proposal for a 6-month digital marketing campaign in 2018? How was the money spent, and where are the results? Did this even happen? The two proposals I'm referencing are below. One was an extension.
Yes, we only did the campaign in the first proposal. It had to be delayed because Facebook banned crypto ads when we were about to launch. We redid the campaign for Google platform and launched there in April. There are more details about the results in the forum, in the project updates marketing section. Basically, we achieved some brand awareness improvements, increased downloads, and there are a few more metrics that you can check there. However, when we launched in Google, Google just announced that they were also banning crypto ads. It was delayed for a couple months, so it didn't affect our campaign, but it was clear by then that the environment for digital marketing in crypto was getting much tougher. Also, the price was decreasing significantly in the market, and we didn't consider prudent to accelerate spending the money because we didn't know when we would get new funds. So we did in the summer a proposal to merge the marketing budget with the travel and conferences one, so we could pay for other obligations that we had unfunded, and we needed to go to the network back for money. That proposal of merging was approved, and the funds for the second proposal were mostly used to pay for Money 2020, for translations, travel expenses, website development, and a few other smaller things. It's worth noting that the funds were not as much as they were in the beginning when they were received, for the reasons that Glenn stated before, because by the time the funds were converted to fiat, the amount was significantly less. We still have some of those funds, and that's mostly the marketing budget you saw in the balance comes from that, and a smaller proposal back in the year for travel expenses, because now everything is together in one budget.
Thank you, Fernando. What pieces of Evolution MVP are still missing after the release of version 14?
That's a great question. So release 14 of Core -D will have pretty much all the features needed to support Evolution, with the exception of blockchain username transactions. So the bulk of what is missing is really not part of Core, but what we're calling all of our layer 2 components. So the protocol for the Dash platform, which you may see references to as Dash Platform Protocol, or DPP. It will also consist of the data and object storage mechanism, which we have been calling Dash Drive, and finally the data access mechanism through our decentralized API, or DAPI. So this is why for Core, version 13 and version 14 releases are so important. Version 13 is critical because of the introduction of special transactions, which blockchain usernames will become part of the special transactions. And version 14, so critical because it implements the long-living masternode quorums, which will facilitate consensus on those layer 2 objects in a manner that also supports HTTP access to the blockchain-enabled apps that will be built on that. So the bulk of the work is in 13 and 14, and with the exception of blockchain usernames. Good question, and we'll continue to clarify that as we get closer.
Thanks for detailed explanation. Glenn, I believe that the next one is for you. At what price point will DCG begin to lower their budget request?
Yeah, I'll take that one. So there isn't really a specific price point at which DCG will begin to lower its budget request. That's because the decision to lower the budget request is really a function of 2 factors. So the first is the price of Dash, obviously, and what really matters there is not the price, but the price at which we cash out our funding proposals. And the second factor is the amount of buffer we basically have in place in our accounts. So I believe that getting funded for several months at a Dash price of around 200, 220 would allow us to replenish our fiat buffers and kind of give us enough relief and comfort where we would start considering reducing our budget requests. That said, kind of the current 60% of the overall proposal budget that Dash Core Group is requesting is already really constrains funding in terms of some of the things we want to allocate resources to. So, as I mentioned, this has had the impact of having to make some very tough decisions when we consider the reductions we've had to make in both compensation and non-compensation run rates that I described in the finance update.
Great. Thank you, Glenn. And the last question from the list, quite very interesting technical question, I would say. Would someone like to comment about the FIO protocol, the Foundation for Interwallet Operability, and how it relates to Dash's blockchain users? In short, they will provide cross-crypto usernames plus pooled transactions, for example, recurring payments and refunds. They have significant backers, including EdgeWallet, KeepKey, and Shapeshift. Should we work with them? Are there flaws in their strategy? Given that blockchain users is Dash specific, how do initiatives like this affect us?
Yeah, thanks. I'll take this. This is Bob. So very relevant, new, and emerging topic. And so I'll give you my opinions on that. And then obviously new topics like this require a lot of discussion across our team. But I think foremost is that this FIO protocol really validates our vision for blockchain usernames, recognizing the difficulty of accessing and using cryptocurrencies inside of wallets. And so we appreciate that. It's always nice to recognize when we're on the right track. What an effort like this typically does, regardless of the technical problem that's trying to be solved, is when you're trying to have interoperability across multiple platforms, you really end up with a lowest common denominator solution on that, because you're trying to say, okay, what is common across all of these platforms, all of these wallets, and you don't necessarily get the opportunity to leverage the most innovative features and thinking. Inter-wallet operability is interoperability, and that just faces a lot of challenges. It's especially in the area of identity, which it truly is. And if you think about other federated identity management initiatives that have been in the industry for years, they have a hard time taking off. And so, you'll still have login options on a new app of I can log in with Facebook, or I can log in with Google Plus, or I can log in with my app-specific username and credentials. But you don't see, that there's global federation at this point in time on common apps, right? On things that might not have the security constraints and concerns that crypto wallets would. So first and foremost, we're going to be concerned with improving the Dash experience, and we'll leverage the simplicity of our blockchain username with special transactions. So we already have a process in place for that, which is exciting. And we'll ensure that those usernames registered have the ability to store data on the blockchain. So it's not just a single purpose of using wallet interoperability, but it becomes that platform that we can use for actually interacting with these decentralized apps that we'll build. So we'll watch the initiative. We'd be very interested in participating, so we could gain the advantages of interoperability across wallets, with the Dash wallets being one of them. But it won't take us off course of doing what we need to do to enhance the Dash experience and leverage all of our innovations.
Thank you very much, Bob. With this, we are closing the round of questions collected on the social media channels. So far, we have also received 5 questions on the YouTube chat, and I'm going to read them now. The first question was, what are the DCG's plans to improve the unusable of default units? As it stands, most daily items priced in Dash are confusingly small, making for poor user experience as a unit of account.
Yeah, we've I'll take this one. We've explored essentially what you're talking about is very similar to like a stock split, where a stock price gets so high that you basically increase the number of shares of stock and decrease the price of each stock, and make it a more relatable number, an acquirable number for people. Crypto is a little bit different in the sense that our units are divisible out to 8 decimal places, and no reason we couldn't go higher. There are a lot of complications with shifting the units, however, in the network. And it involves incredible coordination across a variety of different, well, basically all of your service providers in concert with one another to make that happen. It is extraordinarily challenging task, and to my knowledge, I'm not aware of any cryptocurrency that's managed to undertake that and do it safely, such that people didn't lose funds or overpay for something or something of that nature having happened. I don't think this is the area that we want to be the innovators. I would rather be a fast follower if there is a solution to this problem that is developed, In the meantime, there's no reason people can't switch to using Millidash in the same way that they may shift to using Millibitcoin or some other unit that may be appropriate for their use. So, I think the short answer is there are substantial risks in being able to pull that off safely in a way that merchants and consumers are protected. And we want to see successful implementations of that on other blockchains before I think we would want to undertake something like that. It's also a huge investment of resources, which I don't think we have the luxury of pursuing right now. It would take a lot of research into how that could occur, developing a roadmap in conjunction with our partners. We're not sure that they view it as a priority, so getting their participation may be challenging. So I think the long and short of it is we recognize that it could introduce some usability issues. We would love to see a credible solution out there to it. We haven't seen it yet. And we think there's more value in pursuing ease of use and some of the other priorities that we have on the table already. And maybe that's something we can address down the road when a more elegant solution has been worked out. Hopefully that answers the question.
Yeah. There was some, let's say, more explanation that it was about or related, is about units related to the Venezuelan strategy. If Venezuelan merchants can't reasonably price their goods in terms of Dash, that's a huge lost opportunity. Do you want to comment on that more, Ryan, or are we going to go to another question?
Sorry, can you repeat that?
Yeah. So the question was about units that relates to the Venezuelan strategy. If Venezuelan merchants can't reasonably price their goods in terms of Dash, that's a huge lost opportunity.
We haven't seen a great deal of demand for goods to be priced in Dash. If this is a widespread issue and we should be made aware of it. I would hope that teams on the ground there would contact us and talk about what the specific problem is and how we might be able to solve it. It doesn't sound like there's enough detail here to describe exactly what it is they're trying to accomplish. In our experience, most merchants are not interested in fixing services in terms of crypto, given their volatility, and they prefer more stable currencies. Now, in the case of Venezuela, obviously the preference would not be bolivars, but from what we've seen, they prefer to denominate in dollars or euros or some more widely used currency.
Thanks, Ryan. I believe the next one is to Fernando. When is the updated website going to go live?
Yes, of course. The website is going live in February, so in the next 3 weeks at most. We have already started working on the translations of part of the content, while we keep tweaking a few other things and squashing a few bugs. As I explained in the forum, this was scheduled to happen earlier, but our contractor started to work slower in somewhere in November. Then in December, they missed several delivery dates. So before Christmas, we asked them to send what they had so we could try to finish it internally, because we were checking the work and we knew that most of it was done, but for some reason they were not delivering. The handling of the work was also delayed for a few weeks, and finally, sometime in mid-January, we got control over the assets we needed, and now we have the site deployed in our infrastructure. We're working on it, and we'll deliver in the next few weeks. The main problem is that we don't have anyone internally dedicated to this, so it's been done by people whose responsibilities are others, and we are all working together to have this done as fast as possible.
Thank you, Fernando. Next question. It relates to the roadmap. In the 0.14 section of the roadmap, it mentioned Bitcoin backports. Bob, if you could explain for the layperson, what is that?
Yeah, thanks. We really recognize that happens in all of our major releases to ensure that additional functionality that's in the Bitcoin code base is backported through our efforts to make sure that we have compatibility there. So it's not necessarily a new feature, but it does constitute a fair amount of work each time that we have a release, and that's the reference to it there. It could very well appear in each and every major release we have.
Mm-hmm. Thank you. And the last question is related to our growth strategy, especially in cannabis industry. Cannabis is a multi-billion industry. Are we only taking a single approach, hoping Alt36 succeeds?
I'll take that one. So Alt36 obviously has been our primary partner for the cannabis market. And they've made great strides in penetrating that market with a pretty elegant solution. It's pretty interesting to watch that space evolve. There's a lot of companies that are launching and promising digital payments. Most of them fold within a year or two because they have not addressed compliance, and that's something that Alt36 has taken very seriously. So we haven't really seen any other solutions hit the market that have a sustainable future, at least as long as cannabis remains illegal at the federal level. So we have kind of invested a lot of time and, as a network, a great deal of funds into Alt36's development up till this point. I also feel like there is some merit in concentrating our efforts at this point in time, just given the fact that if we spread our resources across multiple potential partners, we may not ensure any of their success. So I think there's kind of a mentality, perhaps, that we should, focus on making one successful. But the short answer is no, it's not the only approach we're taking. Notably, e-payments that we just integrated this quarter does have their eyes set on the cannabis market, and they do service cannabis industry. It's in a less focused way than Alt36 product suite is aiming to do. And in many ways, e-payments and Alt36 may be complementary to each other. I think there's more discussions to be had and exploration to be had to determine how they might be complementary, perhaps as a channel partner. E-payments can resell Alt36's solution. Perhaps they can add to the capability of Alt36 for cannabis-related items that are perfectly legal at the federal level. So there's a variety of different ways that they might be able to work together. And so, we now have, I would say, 2 partners that have a presence in the cannabis industry, and we'll look for more opportunities where we see a product set that has a real possibility in the market. And if we find any, I think it would be prudent for us to explore, because there's no guarantees with Alt36 as far as their success. But to be clear, they've been a great partner for us. They have achieved many of their goals that they'd set out to initially, and there's a credible path towards them completing the tasks that they were aiming to achieve, including the launch of a consumer product. So I think we'll see how it all plays out. But we're very focused on making sure that Alt36 can be successful, and they've made a great investment in us, and I think it behooves us to make sure that they're able to be successful with our network.
Thanks, Ryan. And with this answer, we are concluding our Q&A
Robert,
section. Yes?
Before we go, there is something else in the chat that is not exactly a question, but some people are discussing about it, and it's about us, so I think we should address it.
Okay, go ahead, Fernando. Sure.
Basically, Ryongul made the suggestion that we set salaries in Dash to solve budget problems. I want to say we've considered that in the past many times. However, it's not really workable, because people do have expenses denominated in fiat currencies, and the risk of volatility is just too extreme. People who work for DCG or other organizations in the DAS ecosystem are already taking a huge risk with crypto, with their career moves. So if we tied that to also the price volatility, it would be almost impossible to have people working in the organization. It would also create very weird internal situations with people getting paid very different amounts depending on the time they join and negotiated their salaries, because it happens both upwards and downwards. So we discarded it. We did design compensation, a retention package that was going to be denominated in Dash. So people had an upside in the future. It was a delayed payment denominated in Dash, but that was last year, and unfortunately we had to cancel it before deploying because of the price situation in the market. So we understand the things that are being said, that we should denominate things in Dash, but with volatility as it is now, it's simply unrealistic.
Yeah, I'll add to this. He is correct that it would solve the budget issue. It would solve the issue for DCG in the network, but it does so by shifting all of that issue onto the individual. And so when the price goes down, people still have to pay their rent, which is denominated in a different currency. If they can't get the exchange rate and they can't pay their bills, they can't stay with the project. It's that simple. So, that isn't an actual sustainable solution. It simply shifts the problem to other people, and ultimately that problem comes back to the network when people aren't able to sustain themselves and need to leave in a disorganized fashion, I would add. So, I think that this is an issue that we've looked at. It ultimately leads to overpaying people or underpaying people, and both are very disruptive to our results.
Thank you. Thank you, Fernando. Thank you, Ryan, for those additional answers. So with that, I would like to thank you, all of the speakers, for information that they shared during this call. I would like to especially thank Alexander Chopin, Liz, Suba, Angelo for preparing the presentation that we have been sharing, and also, of course, thank you very much for participating our call, and see you next quarter. Thank you and bye.
Thanks, everybody.